Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. There is so much to talk about today. We have a massive amount of earnings, big movers, Meta, Microsoft, all of these big mega cap names. Both of them are surging today. We got PCE data this morning. That's the favored gauge of inflation by the Federal Reserve. And that actually showed a slight increase in inflation on the year-over-year number, coming in at 2.6% versus 2.5%, which was the forecast. Now, the month over month was in line at 0.3% increase. But again, this could tell us why the Federal Reserve was a little bit more hesitant yesterday in their statement about cutting rates. In fact, the Fed Watch tool, guys, is now showing us that we are likely not, I repeat, not going to get a cut in September. In fact, let's start right there, guys. Let's go right into that and take a look at the Fed Watch tool. Let me bring it up for you guys right now. If we take a look, we can go, look at that pretty picture of me. There we go. Frozen right on the screen. But if we go to our home page here, guys, you scroll all the way to the bottom. So much free data on here, including earnings calendars. You can see this morning the big companies that reported yesterday after the bell. There's Meta, there's Microsoft, Robinhood, Carvana, etc. And then all the way down past even more economic data down to the bottom. And right here we have the Fed Watch tool. And take a look at this, guys. So right here, look at this. The September meeting on the 17th, right there, 61% chance there is no rate cut. This is, again, would stay the same. This is the current rate by the Federal Reserve. And this, again, is showing us that it is favored right now to not see a rate cut. And what's pretty interesting here is that, yes, there's a cut favored for October, but it's not overwhelming. This is not by any chance. It's not even greater than 50%. So keep that in mind. Yes, it's favored that they will still cut in October. But look at this. We're now only looking at one rate cut into the entire end of the year until January, when we would get our next rate cut there. So really, really interesting here, guys. Again, just something to keep in mind, because this is all about what the markets are expecting. And remember, this is why we saw this big sell-off in the markets yesterday afternoon when the data or the comments came out by Jerome Powell and basically corrected the markets to not be expecting a rate cut in September. All right, one other thing I just want to show you guys real quick that's pretty cool. We scroll all the way to the top here. We can even throw in there. If you go right up here, guys, we've just opened this to the public. This is AI day trade alerts. The AI, again, active learning based on my methodology here. The AI, these are just day trade alerts, but we have stock day trade alerts as well as crypto. So again, you can even get both for a discount. Now, again, remember, this is only day trading, so you have to be literally there constantly watching for these alerts to come out, but it is pretty darn cool. And you can see, obviously, all the data. And again, we have, once you're in there, you can see the track record going back multiple years and all of this stuff. But we've been working on this for a long time. I'm excited to bring it to the public. 149 for the stocks and 99 for the crypto. And again, these are day trade alerts only. We're going to come out with swing trade AI alerts, but that'll probably be towards the end of this year, early 2026. So pretty exciting there, guys, as we continue on here. Now, what we want to do now is we're going to dive right into the charts. You guys know that's what I'm all about. Let's check in on the S&P futures. So S&P futures obviously are up, right? So you can see the market, the stock market closed yesterday right here. I'm going to put a trend line so we can see. So we had this little rally into the end of the day, almost as if some individuals got insider information about these earnings from Meta and Microsoft. So you saw a little bit of short covering buying into the end of the day. Then when those earnings came out, look at the pop, the continued grind up in the overnight. So again, markets are looking to open higher. S&P will be up less than 1%, so it's not a massive move on the S&P, but the NASDAQ, obviously, Meta and Microsoft equaling a huge amount of the NASDAQ 100. That will be up over 1%. It's amazing because the mega caps now, folks, again, I was looking at the numbers. The market cap of the mega caps, the trillion-dollar companies, you have over basically $4.5 trillion on NVIDIA, right? Then you have 4 trillion now as of today on Microsoft. Then you add in Google, you add in all these other ones. Meta now is nearing 2 trillion. The combination of basically the top $7 trillion companies is greater now than the S&P of China. mean, is this ludicrous? Absolutely. Absolutely. But it is what it is. It's the hype, it's the excitement, it's the FOMO, it's all of that combined. Yes, will it eventually end badly? Absolutely. But until then, the party is continuing, no doubt about it. Now let's get into the charts again. We can go to the daily chart of the S&P. Notice again, we had some signals of kind of the market starting to roll. We're going to be gapping up today, but what I'm going to look for here, guys, is basically I'm curious, do we even get above this trend line, right? So this is your bigger parallel on the S&P 500 from the low of 2023 to the April 7th low right here in 2025. And then you take it up to the highest point here. And again, if you look at where we're currently, we closed yesterday on the S&P around $6,363 on the S&P. And then this line is all the way up at 64.21 to 22. So that actually would be about a 60-point move. Now, I think we're going to open up there. The question is, do we see the normal kind of profit taking coming in? And if we get above there, do we reattack these trend lines? That's what I'm curious about here. Now, let's look at the dollar real quick. The dollar, again, remember just a few days ago, I was saying, guys, bullish on the dollar. We got the higher high, the higher lows. Now, listen, the dollar is actually nearing some major resistance. So I think the dollar could go up a little bit more. But again, it is nearing major resistance. Let me show you that key level here. Take a look. Look at this trend line right here. Okay. So again, I would say, see this beautiful trend line from 2023 connected to the low pivot in 2024. And again, it basically comes right up here into that level. So the DXY, look for it to maybe get up to 100.85 or so, a little bit more. And then I would start to expect a pullback on the US dollar. The 10-year yield, let's take a look here. The 10-year yield, again, minor movement here. Yesterday, it popped on the Federal Reserve a little bit, but it is still stuck within a wedge pattern, a classic wedge pattern right here. So nothing to do here on the 10-year. Basically, the 10-year as the wedge pattern, like if we basically were to zoom out on this and we just continue on connecting these dots, right, these two trend lines. So at some point by basically September, it will have to break one way or the other, which again, we're just about in August. So that's only about a month and a half away of more chop that it could stay in the wedge pattern. And remember, folks, whichever way it breaks, you expect a major move in that direction. Again, do I know if it's going to be up or down? I do not know. A lot's going to be determined by inflation, the economy, and the Federal Reserve. But the point being is whichever way it breaks out of the wedge, this is a coiling spring. You're going to likely see a big move in that direction. I would personally favor the downside, but again, that's again, as I always say to you guys, let the charts tell us. My personal educated guess is just that. It's just a guess. The charts are always the arbiter of truth. All right, Meta. We got to look at Meta here, guys. Take a look at this move on Meta. You don't see a company valued at about 1.5 trillion going up this much in one day very often. This is very, very rare. And by the way, even rarer for Microsoft, which is up about 8 to 9% on the morning session. Big earnings here. Their AI gamble is paying off. Zuckerberg has been poaching a lot of talent from the top players. He's been paying them a fortune. Obviously, right now, that's the market is willing to reward them for this. The kicker is this, though. Look at this, guys. And I'm going to tell you my trades here for the morning because I already am excited about these. So look at this trend line here that I had on my Meta chart. And right up here, right around 780 to 790, there's a huge upsloping trend line. And so what I'm going to do here at the opening bell, if we push up, let's say above 780, I'm going to start to nibble on a short on Meta as a day trade. And I'll add probably every $3 to $4 on that and look for a bigger rollover. And one of the things I'm kind of keeping an eye on is the mere fact that, remember, we've seen company after company after company come out with good earnings. The stock often opens higher, and then we see it sell off throughout the course of the day. In fact, remember yesterday in the game plan, there was a company yesterday, and we talked about that, and that's exactly what it did. It was Garmin, GRMN. I even told you I shorted a little bit on this. Did you guys see what this did? Look at this. Look at the daily chart here. I mean, here, let me just refresh my chart here. Look at that. I mean, this, if you got this with me yesterday morning, you all could have entered it with me in this game plan because I talked about it. It didn't start to fall till the market opened, which was about 15 minutes later after I talked about it. But look at that. Good earnings. The stock was up at the open on earnings. Resistance, we talked about the gap fill, the double top. And then look at that fade right there. Now, let's be clear. It would be almost unheard of for a company like Meta that's up 10+% to do that. I mean, it's one thing if a stock that is up like, 4%. If these were up like 4 or 5%, I would be like, okay, maybe they fall. But to see this fall down 10, 11%, no, I don't think that's going to happen. But is it possible as a trader to make $10 on a pullback on this intraday? The answer is absolutely, in my opinion, it is. Same thing for Microsoft. Microsoft, huge move up. It is now a $4 trillion plus company. That is absolutely insane. But the kicker here is this, is that if you look at your daily chart, in fact, let's go to the weekly. Look at this. This is awesome, guys. In fact, this is a strong sell both on the day trade and the swing trade side. It's trading at 557 right up here. Look at where this is. Your lowest point in your bear market of 2022 to your April 7th low. Take a parallel here and drag it up to the highest, with a bull market high in 2021. And where are we trading? Literally right now, we're trading right up into that level at 560. 560 is that level right there. That is awesome, folks. Very, very cool. So this same thing, I'm going to be looking to short this at the open as a day trade. And again, remember, this isn't a macro call. I want to be clear on this. I think a lot of people are like, oh, Garrett's always bearish. Listen, I couldn't care. If a stock is down, I'm going to look at where I'm going to buy it, right? That's what I give you guys, the buy levels. If it's up significantly and it's into resistance, I'm going to look to short it. That's what a trader does. All right. A trader doesn't care about your long-term projections of 5 years out or 3 years out or heck, even a year out. It's all about short-term price action. Where can we get some? Where has the market gone way too far in one direction, where excitement and jubilation has kind of created an emotional response where it's gone up too much? The charts tell us, okay, it's going to reverse here. Okay, let's take advantage of that. Same thing. When it goes down, the chart gets, the panic. In fact, we have a chart here I'll go over. We have a bunch that are down as well, by the way. But the idea is, again, if it drops sharply and people are panicking irrationally, then you're likely to get a reversion trade there. And that's the idea of being a trader, guys. That's really the idea here. All right, let's keep going. Robinhood, at least I don't have to go over a level on Robinhood. We had a bear flag on the daily chart. It's down. It's basically flattish to slightly down here. I would still expect a rollover on this, but it's not making a big enough move after hours in pre-market to have a trade on it. So let's skip over it. We got lots of other things. LRCX. Now, this is interesting because the chip stocks are actually hurting today. The SOX, which is a triple short, the semiconductors, is actually having a nice little move today. Take a look. This is up very nicely in the pre-market. Even with the stock market rallying today, the inverse, the bearish ETF for semis is down. Why? Well, just because of what I just showed you. LRCX, Lam Research, getting pounded on earnings. Not down enough for me to really want to trade it. You can see it's trading right here. First trade for me would be at 86. There's a pivot point. I'll put a trend line right there for you home gamers that want to follow along. You can see right there at 86 Pierce. That would be my first level. But again, beautiful little drop there. Then you have Qualcomm. Now, I actually thought Qualcomm would go up on earnings, and nice, it's starting to rally back. I was incorrect on that, this chart pattern. But look, even the pullback, it's holding this consolidation. That's still actually net bullish. And by the way, the forward PE, and listen, I'm not a big fundamental guy. You guys know that. I'm more technical. But every once in a while, I pay attention. Qualcomm's forward PE is like 13 to 12. So like as a chip stock, 13 to 12, then you look at all these other chips that are trading at 30, 40, 50, 60, 70, 80 times. There's some value there. I wouldn't be surprised if Qualcomm keeps going up throughout the course of the day, maybe even closes flat on the day. So keep an eye on that. And then lastly, ARM Holdings. Look at this, guys, getting crushed. ARM Holdings. So we have 3 chip companies that reported earnings. All of them are down on earnings. And again, folks, ARM Holdings, that's a big drop on ARM, but look at the rally it's had. First level to trade would be right here for me. I'll be eyeing the 138.50 level. There's going to be a lot of trading in the day trading room today. This is pretty wild. All right, another stock getting crushed, Align Technologies. Look at the drop on that. If we go over to the daily chart, it already hit double bottom at 142 and bounced, so there's nothing there at this point. What I would do is actually start looking at these shorter-term downsloping trend lines. So, for instance, this right here, let me get it a little bit more accurately. This would be my first level, 1, 2. The third hit, we should get a bounce there. That would be around 133 today. Should be a good move. Now, take a look at Roblox. Roblox is one that was already sky high. Today, it is gapping up on earnings, so big move on earnings here. You can see it all the way up here, but look at this, guys. It's even at all-time highs. It just burst above. This would be another one that I think at 150 is a good short intraday. Only intraday here. I actually like it as a swing as well, but the idea is, again, look at the vertical move on Roblox, and it's going to be gapping up. that has a pullback written all over it. So again, 150 pierced, it's already above its all-time highs, but look for that reversion trade back down. I think this could come back into the 130s today. I think it'll still be up. The earnings were very, very good, but a pullback there would be very, very likely. All right. By the way, there were other earnings. I mean, heck, we could just quickly go over Carvana. Carvana, incredible. Carvana is also at a new all-time high. I'm not surprised Carvana is doing well, though. I'm going to tell you guys why. So Carvana is a used car retailer, right? And so how do you avoid tariffs? Well, used cars. I mean, used cars that are already in the U.S. that are getting sold to Carvana and they can resell, they don't have to basically jack up the price because of a tariff. Now, what they can do is say, all right, if Ford and GM, and by the way, Ford reported and said, hey, we're going to be taking a $2 billion hit because of tariffs. But essentially, if Ford is raising prices, Carvana can still raise their prices, but just less and still look like a really good deal. And then buyers will be like, oh, well, I'll buy from Carvana because it's still cheaper. And in the meantime, it's pure profit to Carvana. But to Ford and GM, they're paying these tariffs, right? They're essentially paying these tariffs. So that's the kicker, is that it's actually the environment right now is actually good for Carvana as long as the U.S. economy stays good. That's the kicker. So the U.S. economy, as long as it's strong, Carvana could do well. So I'm not entirely surprised that's up on earnings today. All right, next up, let's go to Bitcoin, guys. We got to fly through today because I have so much. We've had so much to go over. Bitcoin just continues. Amazing. So stock market goes up. Bitcoin still staying within a very tight range, 2, 4, 6, 8, 10, 12, 14, 16, 17 days since the topping tail. It has stayed basically between 120,000 and 117,000. That's incredible. Even I'm impressed with that. Now, again, is it still technically a bear flag? Yes. I don't like how long it's taking. Usually bear flags need to play out within a certain amount of time. The favoring would still be downside. But again, like I said, if you get above 120, and you close above 120, then the odds would then be 50-50. And if you take out the high of the topping tail at 123.3, let's say, now all of a sudden it flips very bullish on the charts to Bitcoin. Gold, guys, got a small or sell-off yesterday. It's getting a bounce back today on those PCE data numbers of inflation. But nonetheless, I've been dead on gold here. I'm still holding my second half short on gold, looking at least for here, but maybe even down to 31.50. I would be a buyer starting at 31.50 to begin accumulating. And even if it goes lower to 3,000 or appears 3,000, I would just keep continuing to accumulate. Remember, I talked about recently how I personally thought, based on my 26 years of experience, that we needed to see a flush out in the weak hands that had bought gold at the highs, thinking it was an easy trade. Once those are flushed out, probably with a push down to the low 3,000s, then I think you get your next bull run in gold. All right. Silver real quick. We saw a big sell-off on silver yesterday, continuing today. My buy level has remained here. It is into some support. You can see right here, this 36 and change level, but I'm going to still wait patiently. If it gets down to 34, 60, 70 area, this basically this trend line right here, that would be my buy level on silver. Oil, guys, I did short oil yesterday. It kissed my upper level right here, so I pulled the trigger with commodity members, Smart Money commodity members, and I shorted oil. So again, very cool there, guys. It is coming in. We're in the money on that already. And then lastly, natural gas real quick here, guys. That's not the right natural gas that I've annotated up. Look at this, guys. We are hitting now our technical support. So there is support here. This is your fourth hit. The reason why I show that is because if you know the methodology that I've created, we know that 4 hits, there's a 50-50 chance of breaking. Right. So would you trade this level? Well, and I can only speak for myself, obviously, but the answer is I wouldn't, because I don't want to gamble. I'm in trading to have a win rate of, let's say, 75%. And so if something is a 50-50 chance of breaking or bouncing, well, it just is that. It's a 50-50. It's a gamble. And again, the idea is if it bounces, great. If it breaks, then my buy level would be here, because look, this pivot line right here, you only have 1-2 hits. Third hit has a very high percentage chance of bouncing. And so, again, this is just methodology on technical trading that I think, again, is unbelievably important for you guys to learn. And that's why I talk about it. That's why I reveal it. Listen, I'm not giving everything away in here of what I teach in my course, but the idea is I can share some of it with you to help you guys understand the importance of education. Remember, you're going to pay one way or the other. My lesson that I learned, that I hope you learned from me, is that I spent so much, like literally hundreds of thousands of dollars, maybe even over the course of my first 5 years. Yeah, at least 100. I didn't have a lot of money when I first started, but for me back then, hundreds of thousands was massive. and I lost it because I had to learn all these lessons trading, and I had to learn them multiple times. If I could go back and learn and educate myself, I probably would have spent like 10 to 20,000. Like literally, I would have probably saved myself like 300,000 bucks. Incredible. So the point is, you pay one way or the other. A lot of people are like, oh, I don't want to pay for that course, or I don't want to pay for that because, oh, I have to lay out the money. But trust me, if you're like me, and if you want to be at my level, I'm just giving you that advice, is that it cost me a fortune to learn by taking losses. The market took so much money from me. Kind of crazy, actually, thinking back. Like if I could have just learned a little earlier, I'd probably have millions more in capital in my accounts. But that's the way it is. That's the way it is. We sometimes have to touch the hot stove to learn the lesson. And in my case, many, many times, apparently. So I'm at a point in my career now where I'm crushing it. And my hope is that I can help you guys avoid a lot of my pitfalls. You guys have a great rest of your day. Hopefully I'll see some of you in the trading room. Have a good one. Take care.